All right, today is Wednesday, May 11th, 2022, and it's time to give everyone an update on the $1 million portfolio. So, as of the close of the market today, the $1 million portfolio is sitting just above $940,000. So, this represents a loss for the year of almost 6%. This is for the entire year-to-date period as of today. And it's not really a loss. It's my stocks have gone down 6% for the year. Considering that I'm holding the NASDAQ 100 and long-term treasuries, this is actually a pretty good showing because NASDAQ is down some ridiculous amount, like, 17%, something like that. Let me just check really quick here. But I'm pretty certain that for the year, the NASDAQ is down, a lot. So here we go, 28%. I mean, that's pretty ridiculous for year to date on the NASDAQ. It's the S&P that's down about 17%, almost 18 today. So considering that that's how much the NASDAQ is down and my portfolio is only down 6, I'll take it. I did make some buys for this month, and I actually did it on Monday, so I'm just going to show you the transaction history. What I did was these 3 buys right here because I'm still overweight on the REIT. So I'm just buying the NASDAQ 100, the gold, and the long-term treasury. Okay. So again, I'm spending about $30,000 on the buy-in for this period, and I'll continue to do that. That's what my investment plan says, so I will continue to do it. That resulted in 81 shares for the NASDAQ 100. 12 additional shares of the gold ETF, and 34 shares of the long-term treasury. This entry right here is just some dividends from TLT that got reinvested. So I basically set all of my investments to reinvest the dividends when it comes in. So as soon as it comes in the next market day, it gets reinvested. But the buys for this past month, 30,000, went into these 3 ETFs, and even since then, it's gone down some more. So I did this on Monday when we had like the 4% drop in the NASDAQ. And paid $2.97 a share. And I think right now, the NASDAQ 100 ETF is trading at $2.92. So I already lost $5 a share doing this. But it's fine. It is what it is. So I didn't want to go into, doing the actual trades this month. I'll do that again next month. I just didn't have time when I made the trade on Monday to do that. But I did want to take a moment to talk about market timing and regret and how it should affect you when you're investing and accumulating assets. So the bottom line is that you should not worry about what happens to the market on the day-to-day basis. Try to time it or anything else. The best strategy always is to invest as soon as you have the funds available and just let it ride, buy it and hold it. And better yet, continue to buy on a regular basis so that you can dollar cost average over time. And what you're really hoping for, and I talked about this in the last video, is to have the market go down during the entire time that you're building up your wealth. And the reason for that is that if you keep adding whatever it is, $500 a month, $1,000 a month, $30,000 a month, you're going to buy when the market is falling. You're going to get more shares, and you're going to build a bigger egg over time. So don't worry about markets going down as you're accumulating. You actually want that. That should be a good scenario. But I get it. You may put in $10,000 on a day, and then the next day or the next week, you see it drop by 5%, and you're thinking like, I should have waited. That's the regret part. And again, it's the hardest thing to do, but you need to have discipline and just ignore that and not have the regret that you bought something and the value of it has gone down. That's only on paper. It's only in your account. Until you actually sell it, you've not realized the loss. Okay, it's still a paper loss, and it is what it is. You got to live with it. So that's my best piece of advice, is to try to forget your emotion and do what's in your plan. I know that it's very difficult, especially in volatile markets like this, when you're watching things go down, on a huge basis. On my portfolio by itself, my broad portfolio, which I track on a daily basis, there have been days this year that I've gone down much more than I earned in my first full year of working. Okay, it's a lot of money to see go down in one day, but as long as I'm not selling anything, those are paper losses. And as long as I keep on buying over time and picking up additional assets on the cheap, I'll be good. So I started this video by saying that when I started the investment, this account was $1 million, right? If you look up here, though, it says that my gain loss is actually 15% over this time period, and it's $82,000. The reason for that is that the 6% is year to date. This number is since I started this portfolio. So I think when I started, I might have been like at, I don't know, $1,020,000 something. But for the year to date period, I'm only down 6%. I say only down, but that's still 60 grand, right? In any case, that's the update for this $1 million portfolio. I keep saying that, the last couple of times it was close, right? And it was like, oh yeah, next month we're going to cross the $1 million mark again. Doesn't look like it, at least in the near term. I think there's a couple more Fed meetings to go where we'll see these 50 basis point rate hikes, maybe in the next 2 to 3 months. And then maybe then they'll stabilize and the market will figure out what it wants to do. But I don't think it's the end of the world. I certainly am not panicking. I will continue to execute my plan and just buy into this allocation. Maybe in 3 months' time, I will start buying the REIT again, But for now, I'm just going to buy these three until it catches up to the REIT holding. Because ideally, this should be about 10% of my invested funds. And right now, it's a little more than that. But I think that over the next 2 to 3 months, I'll get caught up. And then we can buy all 4 of these assets. All right. That's it for this month. I will see you in the next one. Just stay the course, as Jack Bogle would say, and leave your emotions at home. All right, see ya.